Manufacturing production declined again. Output for February fell by 3.2%, matching the previous month's contraction. This marks the fourth consecutive monthly drop. The largest drags on production came from two key industries, namely motor vehicles, parts and accessories, and other transport equipment. The petroleum, chemical products, rubber and plastic products unit also weighed. Earlier, I caught up with Philip Rodseth, Executive Director of the Manufacturing Circle, to unpack the print in greater detail.
The stats indicate that absolutely we're not in a positive situation from a manufacturing perspective, and I think also more broadly from a global perspective. So as we often see in the month-on-month or year-on-year stats from a manufacturing production and sales perspective, there's often volatility, there's not much consistency. So that really, rings true in terms of what we see in these current statistics, and also not necessarily surprising, given that we've got very low domestic or negligible GDP growth, and that is also compounded by what we're seeing in the global economy, which is very, very volatile and very uncertain.
SA's new state-owned petroleum entity has begun operations a week later than scheduled. The SA National Petroleum Company is a merger of three Central Energy Fund subsidiaries, namely iGas, the Strategic Fuel Fund, and PetroSA. The SOE will handle the exploration, production, refining, marketing and sale of petroleum products, and will be responsible for supporting the growth and advancement of the country's petroleum industry. In addition, the company will be entitled to a 20% interest in petroleum rights, including exploration and production. Anglo American says it continues to work with Peabody to complete the sale of its steelmaking coal business. This comes after the U.S. company says it was reviewing all options following an ignition event at the Moranbah North mine. That asset forms part of a near $3.8 billion acquisition deal signed between the two companies last year. But Peabody's cast a doubt on the agreement after this incident. Anglo's reiterated that it's a minor ignition with conditions in the mine said to have normalized shortly afterwards, and that data and camera footage show no evidence of damage. Tharisa's weathered tough conditions. The chrome and platinum group metals miner has posted a near 9% rise in second quarter PGM output, while chrome production increased by a modest 1.7%. CEO Phoevos Parolis says it was a solid quarter dampened by unprecedented rainfall and weather interruptions where lightning disruptions hit an all-time high during the period. That led to higher than budgeted input evacuations, which affected mining mix and volumes. But he's optimistic and says the drier winter months should help bring production back to more normal levels. Life Healthcare Southern African business has experienced good underlying activity growth with increases in overall paid patient days and occupancies. The private hospital operator says that the halfway stage revenue per paid patient day increased by about 6% due to a change in case mix and a tariff increase. And that supported revenue growth of about 8%, but its bottom line's taken a knock. That's largely due to costs related to its disposal of Life Molecular Imaging, which is expected to see it report a headline loss per share from continuing operations of around 148 cents. Choppies is exiting Zimbabwe as it seeks to focus on its profitable regions. The retailer says it believes in the country's long-term viability, but it would need to invest more capital for extended periods to make these operations profitable, and that support is not economically viable for the group at this time. The deal is valued at $260,000. Further afield, Chinese producers of festive decorations and plastic Christmas trees said orders from U.S. clients have slowed as both sides are cautious about the risk of rising import tariffs, putting them in a wait-and-see phase. Let's take a look for more detail.
Chinese producers of plastic Christmas trees and decorations expressed worry That's as US President Donald Trump's reciprocal tariffs took effect, including 104% duties on Chinese goods. China's Christmas industry said on that orders from the US have slowed, with both sides cautious about the risk of import tariffs rising further. These tariffs are the latest step in an escalating trade war that threatens great pain for China, the world's largest exporter of manufactured goods. US retailers are almost completely reliant on the country for Christmas decorations, sourcing 87% of their goods here. Chinese factories are also heavily dependent on the US market, where they sell half of what they make.
之前没有到那个104%的时候，
Li Bo, a product developer at Jiaxong Craft Factory, said before the 104% tariff, US clients asked his company to ship as early as possible. Instead, he said, these clients haven't rushed for products and are in a wait-and-see phase. China's 84% retaliatory tariff on US goods came into effect Thursday. That's up from the previously announced 34%. American Christmas Tree Association's Jamie Warner said she's very concerned as tariffs ramp up.
We're really not sure how the consumer is going to react to this, but with prices will definitely double for all of our products, and we don't know if that's sustainable. I mean, the 104% tariff could be the Grinch that steals Christmas.